I'm Patrick Tuttle, the real estate guy with Coldwell Banker Heritage and Legacy Management Services with your El Paso area market update for real estate for May 2025. And here's our data. So we're going to start off with our existing homes. And you can see right here with this little green line, inventory went up and sales pretty much stayed flat. Here's what specifically happened. Sales were up 4% year over year from 525 to 543. Months of inventory, this is the big story right here. We've got more homes available than we've seen in a long time. So we're at 3.39 months of inventory. What does that mean? It means that if nobody else put their house on the market today, that it would still take us almost 3.5 months for all those homes to get sold. And be clear, not everything's going to be sold. Good job. Hey, not everything's going to sell because some of it's either too high for the condition it's in, or there's not a buyer in our marketplace looking in that price range. So even though this says 3.5 months, not everything's going to sell. Now, continuing, average selling price is actually down. This is the first negative that we've seen on a month-over-month basis in quite some time, but I'm going to show you the FHFA appreciation charts in just a second and show you that we had some negative appreciation in Q1 2025. So this is an indication that prices are going to start going, maybe they're going to flatten out here, maybe they're going to recede just a little bit more, but this is what a lot of the buyers have been looking for. They've been saying, when are prices going to come down? Interest rates are going up. When are the prices going to go down? Guess what? They're doing it right now. It already happened in Q1. This is the data for May 2025, and it happened again. Average size of the home, we've still got that shrinkflation just slightly. We're at 1,816 square feet. Average last year was 1,833 square feet. Almost negligible, but it's still a decrease nonetheless. Price per square foot is up 0.5% year over year. We're at 149.33 this year. And days on market, we're at 54 this year where we were at 39 last year. That's an indication that the buyers have more inventory to choose from. So they're taking their time and making a selection, and then they're coming in with lower prices on those lists. It's rare that we see multiple offers anymore. It does happen in some cases, but it's not a 2022 market. So if you're a seller and you're on the market wondering why hasn't my home sold, well, it's because the buyers are saying we don't want to pay those prices. And I'm going to show you in just a couple of minutes what's going on with interest rates as well. Okay, now moving on, I'm going to show you the FHA appreciation rates. And the reason I'm putting it here instead of moving to the new homes is because this is on existing homes only. We don't track the appreciation on new homes, but once they get sold and then they get into the inventory, the Federal Housing Finance Agency tracks year over year and sale over sale data to tell us what's going on in the marketplace. Now, here's what's going on in El Paso. We actually had a negative 1% appreciation in Q1, that's quarter one, January, February, March of 2025. And then if you look back, the last time we saw that for a year was in 2014. We had a negative 1.3% appreciation rate. But over here on the right-hand side of the bottom, you'll see that we have 3 out of the last 4 quarters where we had negative appreciation. So prices are dropping just slightly, not a whole lot, and we'll see what happens as we get through the summer months, okay? So this is our appreciation report here, negative 0.1% so far, and then this is our candlestick report, and again, we've got a negative 0.1% there. The last time we saw that for a full year was in 2014. So 10 years ago, a little over 10 years ago, we saw negative appreciation, and that's concerning. Is that because of the tariffs? We don't know. It's probably anxiety over the prices and the affordability just getting too high, and the fact that interest rates have been at the mid-6s for the past 2 years, and they're going up. And I'll show you that in just a second. Now, here is the good news, is that we are in the top 100 metro areas for the United States. So we came in at number 79, just below Fort Worth, and Los Angeles and Oceanside, Riverside, California, just above Denver, just above Omaha, San Diego, and Houston. So we were at number 79 for the top 100 markets in the United States by the FHFA appreciation rates for 2025 Q1. Now, this is what Texas looks like. Texas had a 0.1% appreciation, so not a lot of margin between what we saw and the rest of the state saw. And then there's your candlestick report, which just shows there, and we haven't seen a negative appreciation rate except back in 2010 for the state of Texas. Now, our neighbors over to the north and to the west, this is the Las Cruces chart, which is Las Cruces, New Mexico, Santa Teresa, and Sunland Park. We're also seeing negative appreciation there on resale homes, 0.6% appreciation, so just over a half a point right there. And the last time they saw that was back here in 2014, pretty much the same thing we saw down here in El Paso. There's your candlestick report, which just gives you the graph there in a different way. So far, 0.6% depreciation in 2025. Now, how's that compared to the rest of the state of New Mexico? Well, the rest of the state fared fairly well at 0.9% appreciation, and the last time they saw a negative appreciation was over in 2011. And that's at the tail end of the drug war over in Mexico. And I hate to tie that back in, but we all got propped up with the drug war where people were coming from Mexico, settling here in the El Paso, Las Cruces area, and then they started moving back as the drug war started to settle down over there. So that's what happened. Now, the rest of the state, again, 0.9%, it's faring pretty good, but El Paso and Las Cruces are so tied together, and especially Sunland Park and Santa Teresa, because they are essentially El Paso, even though it's another market when you cross that state line. New homes, let's go on over there. So flat pretty much on the inventory. Sales are pretty much flat as well. We did see some numbers moving up. So we went up 255 homes to 264 in May of 2025. And months of inventory is down year over year, 22% down. That means that there are fewer new homes. Now, when I'm looking at year over year and month over month, we're seeing some big numbers, 20 to 22% increases in sales overall. But when you break it down a little bit, now we're starting to see where it's starting to level out as we get into these summer months. So average price is up 1.8%. We're at $314,147 for the month of May 2025. And the average size home, again, shrinkflation. They're getting smaller so that they can keep those prices up. The size of the homes was 1,818 square feet in the month of May 2025. Price per square foot went down. We're at $173.33 per square foot. That correlates to the size of the home going down and the price going up as well. Now, days on market, this is the big thing here. We're at 108 compared to 141 last year, and that's always something that we want to look at, but it's not a real indicator as to what's going on because we don't know where in the construction process all these homes are that are available. Somebody may put a contract on one today that is nothing but a dirt lot. That may be a finished house too. So we don't know, but I'm saying that when you're looking at these days on market, really probably cut it in half. Same thing with the months of inventory because we don't know exactly where those homes are. So if we go back to our months of inventory of 5.15, that really means we've got somewhere around 2.5, 2.6 months of inventory that's ready to deliver today that could be closed on in the next 30 days. Okay. Now, if we look at our interest rates, we are now sitting at 6.91% interest for a conventional 30-year mortgage. That's higher than what we reported last month. In fact, with the downgrade of the United States on the credit bureau last month, we're starting to see those interest rates rise, and this is likely to have an effect on the sales because buyers are going, well, prices are up here, and if interest is up here, I'm going to stay put. I'm not going to be moving, and that could exasperate our delays in getting homes sold, and it may cause us to have negative sales as we get through the summer months. It's definitely causing some deflation on the prices that we're seeing right now. Index returns, Dow Jones, everything's pretty much positive over here except on the 3-month S&P 500, the Dow Jones Industrial Average, we're seeing those negatives there, but we're back into the positives on everything else. Now, our three key takeaways for this month. Number one, spring selling season is not as robust as what I thought it was going to be. Typically, we're going to sell 36 to 38, maybe 40% of our inventory in the months of April, May, and June. Maybe it's May, June, and July, but that 3-month period of time, we see a lot of sales here. We're not seeing as much as we typically would, and that's an indication that the market is starting to slow down a little bit. Inventory is starting to rise. Prices are going to go negative. They're going to go backwards a little bit, and the interest rates are going up. So you combine all those three things together, seems like a good time to buy a home because you've got more inventory to choose from. And as sellers continue to hear what's going on in the national news, they may get softened up by the market, and you may be able to get a better price on that. So spring selling season, not as robust. Number two, resale home prices have leveled off and are decreasing slightly. This is what a lot of the buyers have been looking for, and sellers are going, hey, what's going on? Well, it's the affordability issue. So when home prices get too high and the interest rates get too high, the buyers are going to say, I can't do this, because they're getting to the point where, at least in the El Paso market, our wages are not increasing at the same kind of rate as what the home prices were. And with the money costing more, it's going to have that effect. Unless new money comes into our marketplace from somewhere else. Maybe it's going to come from the folks that were victims of the fires in California. We don't know. But if that comes in and gives us a boost, that's about the only way we're going to see increases in the marketplace. If we look at unemployment right now, we're looking at 4.4% for the El Paso region. Texas is like 4.1%. And the tariffs are definitely giving some anxiety in the marketplace. That's starting to show right here with our prices going down. And mortgage interest rates are increasing, and that's likely to slow the market a bit as well. So you tie all these things in. I still think this is a great marketplace to be in, because for the most part, we have great prices compared to the United States as a whole. We got great weather except for the sandstorms. Yes, I know, don't castigate me on that. But I think we're past that for the season, and we've got some great temperatures out there. The skies are blue. We got a few clouds as we get into our monsoon season. We got a great airport. We've got great culture. We got tacos galore that you can eat. So I love El Paso, and I think it's a place that you ought to consider buying and settling in. And if you're already here, hey, help us out. Let's get this market to being the fantastic place it is. 79 is a good number there, but we need to see us on those top 10 lists more for the best places to live, the best places to eat tacos and Mexican food and everything else. And if you've got questions about how this information affects you, just roll into it, slide into my DMs, and give me a message. Tell me what you want to hear. I'll talk to you about that and see whether or not we can do it. But for now, that's our report. Thanks for watching. God bless you, and make it a great day. Bye-bye.